Hi, everyone. Welcome back to the Mortgage Heroes Weekly Podcast. I'm Andy.
I'm Will.
And I'm Brian.
So this week, guys, we got to talk about the debt ceiling. It is here, and we need to talk about the government agencies and department impacts on housing. So if the government has a temporary shutdown, what impacts can we expect in the mortgage industry?
Everything's going to crash and burn.
Oh, okay. All right. Thanks for joining us. We'll see you again next week. Okay.
I don't know.
Let's dig into some of the details. So what are some of the things that immediately we think and we know about that are going to have impacts?
Me. Well, I already started seeing it. Interest rates are rising. They're going up, Andy, and they're going up like full force. It's like we've just added fuel to this flame, and it's just like it's pretty crazy.
Yeah, I noticed the other day the 10-year yield was starting to charge a little bit, I think in anticipation of there being uncertainty. But, hopefully this gets all worked out extremely quickly. But if for some reason it does not, the 10-year yield will continue to charge because, again, uncertainty is going to put money into safe havens, which bonds are considered. So
yeah,
that's
one of the biggest things that we're seeing, especially us being in this industry right now and discussing this. This is just... It's just getting out of control.
Yeah, and then even on the global spectrum, I mean, I feel that since the United States holds such a huge play in everybody's economy, us defaulting is going to also, by default, mess up everybody else's economy and the trajectory of where everybody else is heading. So that's going to be a huge disruptor in the global market. So that's something that, might happen, might not happen, but we'll see here soon enough.
Yeah, there's definitely a cascading kind of issue. Like it's like dominoes that are set up, and you play dominoes, or not the game, but you're stacking them to knock them over. It is kind of that situation. But I think locally, for us, locally meaning within the United States, there are some material impacts that are going to have in housing and real estate, possibly day one, possibly week one, month one. And I think some of that is just going to come down to the negotiations and what is allowed to stay open. I'm going to use, for example, VA, which is critically important for us from the perspective of active duty military and our veterans who are getting some sort of compensation, whether it's disability pay or if even it's their BAH or BAS, like that is something that is of critical impact to mortgage and real estate when it comes to doing VA loans.
Yeah. I mean, a lot of us don't understand what that debt ceiling is, right? Andy, can you simplify it to like somebody like me? I'm at third grade. Like, how do I understand this? What is a debt ceiling right here, right now?
So think of the debt ceiling like your personal checking account. So let's say every single year you make $100,000, but every year you spend $134,000. You're overspending, and that is actually the exact ratio we're at right now. We actually spend 134% of the amount of money the United States makes every year.
You mean to tell me I have to have a lot of overdraft protection here then?
Yeah, that exactly. So we have an inverted income to expense ratio as a country.
But wait. So what you're telling me, you make $100,000, it's $134,000. That would be 134% more that we're spending.
That's correct.
And then you're telling us that the government wanted to put a LPA saying, hey, you can only go above under 40%.
40, right?
So wait, what?
How fair is that?
Yo, I'm trying to get their DTI.
Andy, am I understanding that? Because again, it's a third grade, right? So I have to get this.
No, we got some hardcore clowning on the show today. That's awesome. So that's funny. But yeah, I mean, essentially what's happening is in general, we're spending more than we make.
Yeah.
And because of that, we really have two choices. We either have to make a bunch of money more in a short period of time to close that gap, at the same time while paying down debts we owe, or this is what they're talking about. They have to increase the debt ceiling, meaning we have to allow ourselves to now spend more than the 31 trillion that we owe.
Whoa.
And we have to mark it to 36 trillion or 38 or whatever that number. It doesn't matter what the number is. It just has to be more. So some variation of that will have to be considered as these proposals are getting batted back and forth by everybody. And in the middle of all that chaos are these government agencies and these, even some of the regulatory agencies, which are directly funded by this income the United States makes.
Wow.
So if the United States is making $26 trillion every year, but we owe $31 trillion, that money is going towards things like the IRS, towards the VA department, towards HUD, towards Fannie Mae, Freddie Mac, FHA, USDA. All of these things are housing related, and they will come under direct pressure.
Jesus. What's after $1 trillion, guys?
Google?
I don't know.
You know,
when I was upwards.
1 zillion.
Right? Yeah, when we're growing.
$1 zillion.
When we're growing up, I mean, it was hard to spend $1 million, $100 million. Now we're talking about trillions.
Trillions.
You know, how many, and I used to remember they used to put like a dollar, how many times it goes around the world if you had 100 million or what have you. Imagine 1 trillion.
Now that your dollar goes down the street, that's it.
Yeah.
Wow. This is great. And thank you for just simplifying that and breaking it down. I get it now. I get that.
Yeah. So we there's like the problem, but then there's the impact of the problem.
Yeah.
So we're not going to sit around this table and fix the problem.
Yeah.
But we might be a byproduct, not a byproduct. We might be affected and impacted by that problem because of our clients we serve, the realtors. Like I was thinking today just about, okay, what about someone who has their house for sale? The buyer is a VA buyer. Okay, now the VA buyer is relying on VA services and the VA office to be open to do certain things we need done in the process of a VA. That seller needs that deal to close so they can go buy their next house. So where we have concurrent closings, there's potentially this 2, 3, 4-fold issue where the first domino in that stack of dominoes could prevent all these other escrows, which means extending escrows, extending time frames, and you don't know what the next deal looks like, but you're at the forefront of it.
That's a very good point that you bring up. So you're meaning to say that essentially if you're in transaction and by some reason the government does default and now the VA is not open, you're saying that certain documents accessible to us now probably is going to take longer to get?
It's possible because there's some things that we get through the VA portal and there's some things that we require a person on the other end to produce for us. That's the same thing with the IRS. Sometimes you can get tax transcripts by requesting them online. Sometimes it requires more detail and there's a person behind that. So there's like this separation between what is semi-automated or accessible online versus what it requires a person to do for us or with us. But all these agencies I rattled off a minute ago are funded by government money.
Yeah.
So when you're talking about Fannie Mae and Freddie Mac, well, those are government-sponsored enterprises. What will be the impact of that? It may be none. It could be some. It could be all. It could be maybe down the line. A lot of that just has to do with what it looks like at the 11th hour, which we're at.
Yeah.
And Will, you brought up a good point earlier before we hopped in the show. You mentioned that one of your, close friends or, clients works for a government entity and sometimes, the pay gets,
Yeah, no. So we,
because
it's true story. I was at the gym with them talking, and I go to the gym, but so we're at the gym talking, and I asked him like, "Hey, you're at, with this whole debt ceilings going on, like, are you even remotely concerned about it?" And he goes, "Well, I'm concerned that I might not get paid." And I go, "Well, it's like you work for the government, you always get paid.
Yeah,
like come on." And he goes, "As a matter of fact, there's been a couple of occasions that I didn't get paid." And I'm like, when? You look too young. You couldn't have been working in the force in 2008. And he goes, "No, this has been a recent thing. We haven't got paid." So what I ended up doing was opening a bank account with Cabrillo, National Bank. And I guess they float the pay.
Wow.
So he can go ahead and make sure that if the government doesn't pay his, his paycheck, well, he could still pay his house payment or his car payment, whatever, childcare, whatever that may be, which is crazy. I was like, wait. I've never heard of it.
It just made me think as you're telling that story, like, what would happen in, play this out. What would happen in underwriting? Like if there's a gap of pay, now we're gonna have a gap of pay. We got to backfill, write an explanation for if the person is at a job that is government backed and there is a gap of pay for that, week, 2 weeks or month or however long it takes, that's going to be more paperwork.
That's an interesting,
hopefully we could get the pay stuff and somebody's working that can produce it. One,
Public
right?
Cabrillo can send it out.
Second of all is, go look for a bank that's going to float that money, right?
What about, and the question arises, what about military pay, like their LESs? Is that connected to government?
Well, again, that comes down to whether or not that is part of the package that either gets approved, partially approved, or kick the can down the road and do later. Like it's almost like you have to prioritize. Okay, which of my 100 kids am I going to feed this day, this month, or this week? Right. So if all of them need to get fed at some point, every department needs to be fed money to continue being afloat. Which one am I going to feed today? Which one can I afford to feed tomorrow? Which one do I need to feed and retroactively catch up on their weight because now they're emaciated because I didn't feed them for a week?
You better behave.
Oh, dang it. No, and it's one of the things that I noticed is like between all this commotion, all the investors are basically like running crazy. Like they don't know what's going to happen. All this volatility is going, all over the place. So it's like, we see the rates, they're up, they're down, they're up, they're down, but we still don't know what's going to happen until, when are we
Last
supposed
minute.
to run out of money next
supposedly
next
as early as June 1st,
according to
which is tomorrow. So, that's the issue is it's the 11th hour. Not everything is figured out, even though they're going to say a lot of things are figured out. a lot of this is going to be wait and see, unfortunately.
Yeah.
Yeah, that's just crazy.
Yep.
Well, back in, I mean, you were probably just born, right? 2008, but we were hearing these things happen, Brian. These
About
things
2
were
years-
actually,
2 years
we were
previous.
hearing like some of our military clients, when they were purchasing after going the mortgage meltdown, they were worried that here goes our national, U.S. debt ceiling once again situation. They were worried that, I don't know if I want to buy right now because I don't know if I'm going to get paid next month.
Yeah.
And it just gave me flashback to that again, hearing all this stuff, and it's how uncertain it is now.
Yeah.
So,
I mean, you have to think about it like even at the most granular of levels, like there's people that maybe they're getting government aid for groceries or Section 8 housing and paying rent. Like all of that stuff ends up having a ripple effect through the economy.
That
because
makes a lot of sense.
you think about it in a neighborhood where people are getting Section 8 and they're subsidizing their rent with that. Well, that has an owner attached. It may not be this big ownership group. It could be a mom and pop owner that owns 2 or 3 or 4 properties and they're accepting Section 8. But that means that their mortgage now is maybe paid or not paid because of receiving or not receiving Section 8. And then that's that bank involved and that person involved and their credit if they have a loan. And it has like material impacts beyond the first and second order.
now that we're talking about impacts, what if the U.S. ceiling was to go in default? What impacts can we actually have in our market?
There's a time answer to that because like immediately it means certain things and then long term it means other things.
Yeah.
Because I think how quickly that comes to resolution has a lot to do with how bad it is on the international stage.
Yeah.
The reality of the short term is some things will be sacrificed in the spirit of trying to come to a resolution as quickly as possible. But there's another problem when you look at generationally speaking. If you continue to kick that can down the road and you just keep going 35 trillion, 38 trillion, 40 trillion, if you're still playing catch up on the income side, it doesn't matter what the debt ceiling becomes. And then that can cause a lot of conflict with the people we owe money to, have agreements with. And it also will, I think, my opinion is that would rattle the cages of people's confidence in the dollar.
Yeah.
I honestly
Dollar,
think that
stock market, bond market, there's a
Everything.
recession, interest rates increasing.
I think it would be a big problem.
One of the things in the way that I look at it is, obviously, our age demographics are, different. So one of the things that I look at is like, well, in 20 years, how many of these people that are, holding high positions in our government are actually going to be relevant? And it sucks to say because at the end of the day, they're going to go. They're going to do whatever they have to do. They don't have 30, 40 years left in them. I can assure you that. So guess who's by default going to have to carry the bill?
Yeah.
It's the next
The
generation.
younger generation.
It's our kids, grandkids.
Thanks, us, my kids, like all that stuff. Unfortunately, they're going to be the ones that have.
That's what happens because you just want to have new kids now, Aunt Brian.
But at
That's
one
what you
point,
get.
Hey, I'm just doing my humanitarian,
at one point we were those kids though. Like, 20 years ago, 30 years ago, we were those kids that were going to come up and take care. And so this conversation is not new. It's just current again. And
I just think
sense.
it wasn't as difficult for me as it will be for his kids.
I mean, it's true. The
I
numbers are
agree.
different. The numbers are drastically different.
Yeah,
but,
no, it's crazy.
But it's all within context and it's a matter of perspective and all that. But,
Such different times. We have way more resources that were available when you guys were growing up. So by default, if you leverage them right, there is opportunities, I believe.
Yeah, absolutely.
Yeah.
Absolutely.
Yeah, so I think there's some practical things that we need to just like prepare people for and discuss. What are some of those things like on the top of your mind that maybe would help people know what to do next?
Yeah, the next thing to really prepare is have an emergency fund.
Yeah.
Mm-hmm.
Always, stash away. Anytime they tell us, hey, if you're self-employed or whatever, put extra money, whatever you're going to, tie to your church or what have you, put X amount in, then X amount for this, that. Nowadays is just establish an emergency fund for that. The other thing would be pay down your debt. True story again, my son, he has extra money in his bank account. And then I'm like, yo, how much debt do you have? Well, I have like $14,000 in debt, but I have $30,000 in my bank account. And I'm like, pay down your debt. Your debt, your interest rates are much higher, like 14, 16%.
Yeah.
How much are you earning in the bank? I'm starting to see banks giving you a little more in interest, 3-4%, right? But still, it doesn't outweigh that benefit. Best thing to do is pay off that debt. You don't have that debt. One thing that'll happen is, one, you don't have that monthly payment.
Yeah.
Two, your credit scores, you're just increasing them. And third, you'll be able to save that money back. So whatever you paid, instead of making that monthly payment back to that credit card, pretend that, and then just go ahead and replenish those funds back into your bank account. It's simple.
Yeah. No,
you know what I mean?
Yeah.
But the key is pay off your debt, emergency fund, you know, and just prepare yourself for that.
Yeah. Another good advice that I'd give is, really sit down with your partner and really map out what the next, year looks like for you and your family, your spending, your budgeting. And it goes towards what you said, because at the end of the day, I mean, your partner is your other half. So if you don't have that communication, something could be happening over here and then you have a leak in the boat over here. So it's ultimately important for you and your partner right now to be, in congruency and be able to be together and think the same thing. And even me as a younger person, like that's the conversations I'm having right now with Michelle. Hey, this is where we're at. This is what's happening. This is what we can expect to happen in the next couple of months. Hey, this is how we got to pivot, or put our situation in a better place, or put us in the position to have.
And there's nothing wrong with that. You know what I mean? Hey, I feel like the debt ceiling is keeping up with the Joneses, right?
Yeah,
we can't. So just don't do it. It at the end of the day, it doesn't work out, right? Also, which brings me to, this is a new thing, your generation. We got Bitcoin, we have Ethereum. Be careful with all those things.
Yeah.
Make smart investments, and pay attention to what you're investing in, whether it's Bitcoin, whether it's properties, whatever it is. Just make sure that the numbers are going to make sense.
You bring such a good point. It's taking calculated risks. I think 2 years ago you could take wild risks. Money was cheap. If you lost it, okay, it's okay. But nowadays it's like, we're running out of money. United States is hurting. So it's like calculated risks right now, and the opportunities that do present themselves is going to give you a better return or yield on whatever you're trying to accomplish.
The best analogy I can use is before we throw the boat on the lake, right? And we're cruising by, all the fish are just jumping in our boat. And we're like, well, wait a minute. We haven't even stopped. Now it's the complete reverse. Now we have to take out the boat, make sure we fuel it, make sure we stop. Yeah. And then when we cast our line, what kind of bait are we getting? What kind of bait are we putting on there? Now you have to be very specific on what we're getting,
100%.
And we throw one rod, it's like that's not going to increase our chances anymore. We have to kind of throw, cast 40, 50 rods out there.
And then go search in areas where the fish are now hanging at.
That's it. Yeah. It's the best analogy I can actually use right now. Yeah. And I think we're all we have to find a way how to be creative.
And it goes to my next point. Right now is the perfect opportunity to start seeing what it is that you're good at outside of your primary skill that brings in the income. Because I'm sure if you have a job, you also have different skills. And if you could build on those skills and systemize them, then you ultimately are going to be building something that's going to bring you more income aside of what your income is right now. And it's okay, because now at the end of the day, once things switch up and it goes right back up, because it's a cycle, everything happens, it goes up, it goes down. Now you got 2 incomes, possibly 3 if you leverage your skills correctly. And in a world where you have tons of opportunities to learn, it's like you're almost handicapping yourself if you don't take a step to better your situation, like you by default.
So there it is. That's how we prepare. That's how we do these things, and if you're a homeowner, leverage your home.
Yeah.
You got a 2-car garage that you don't use, convert that into an ADU, an additional dwelling unit. That'll bring extra income for you.
Yeah.
And these are little things that we're doing. We're helping our clients. I'm doing myself. I got a project. And so these are things that I'm doing to make sure that I'm preparing and that I come out of this, because it is cycles that we go through,
And another one is, with the equity in the houses, there's still plenty of equity, right? So right now, if money's running out, you could definitely tap into your equity. Now, the rate is going to be higher, but that's okay, because you can offset it if you have the money in the bank and pull from there. Meanwhile, things are getting back to order. But at the same time, you could wipe off all your debt, be debt clear, and then that's going to be money that you save, opposed to basically you paying it every month. Maybe you want to add an extra ADU. That works out perfectly. And people have more than 40% still in their houses of equity. So it's like, if you want an out, you have an out if you have a house. Like there's options in this market right now if you're a homeowner. So it's like leveraging them the right way. And there's plenty of ways. And it's also tax free if you pull out the equity.
Well, I think I'm done already. I'm excited. I need to go out there and find another opportunity right now. Thanks, Brian, for all that feedback. It's like staying informed is key.
I was going to say, like, there's so many good parallels for this conversation to things we talked about a long time for over a year and a half now of being prepared, predicting what's going on, and then and persevering, like maintaining your flexibility, using what's at your disposal and within arm's reach to better your situation, save for a rainy day, pay off the debt, have a family budget, have the conversation, leverage your assets, all that. Because in the end, like government spending will not go away. The real issue is going to be, well, just what does it look like after this set of decisions, and who's going to pay the consequences of those decisions? So a lot of really good like feedback and a lot of good advice and a lot of good input today. We're going to probably have to talk about this some more moving forward, because I don't see this completely just resolving smoothly. Even after a conclusion of the debt ceiling conversation, there's going to be what this looks like now across the agencies we still even work with when it comes to making loans.
Right.
So, it's like one thing after another, and if you're still standing, like, props to you. Keep going. We're gonna make it out of this.
It'll be all right.
That's just the way life is. I don't care what you do. That's what hey, you're having another kid.
Yeah.
Look,
I'm not stopping me.
There you go.
On the contrary, that motivates me even more to go out there and get shit done.
Yeah. And what I'm saying, that's what you just get these changes. You know what I mean? Then next thing you know, kids are graduating from preschool and. Oh, no. The thing is having half of birthdays nowadays.
Oh, no.
Got to celebrate.
You guys are welcome.
Birthdays, you know
you guys are welcome or not welcome, depending on how you look at it.
Nah. All right. Well, thank you guys very much. I appreciate your feedback. Thanks for joining me again on this somewhat, controversial topic.
But it's good to know.
Yeah, no, of course.
All right. Good chat today, guys. Thank you all for watching and listening. Yes. Be sure to join us for the next installment of the Mortgage Heroes Weekly Podcast. We appreciate you, and we'll see you on the next one.
Bye, guys.